So, good evening, friends. Today, a short analysis of Bitcoin, especially. Uh, well, it's hard to believe, especially for the bulls, that sooner or later Bitcoin will drop down, not only out of the fundamentals. We have the halving of Bitcoin in front of us beginning in April. That's next week, in some days. But also the global economy, the liquidity is going back. Jerome Powell explained in his last speech that there is no chance or less chance of recessions, but on the same time he admitted that the rate cuts will be far beyond any imaginations of market investors or traders who really want to believe that one day we will have some rate cuts of the United States. And if yes, there will be only a few one, or maybe two, but I doubt in this year. And yes, we will have the recession. He's saying that we have no recession, or we will have no recession, of course, because of the presidential race in the United States, and he has to offer something to the US government currently to present him some good results. Of course, these are all words, but the facts showing that inflation is rising up again. The last CPI and PPI numbers has been confirming it. And in recession times, there was an asset, deflationary asset like gold and some precious metals or commodities, they need to get up. But also I see personally that the all-time highs period of gold is going to be over, as to buy gold and assets and also digital currencies like Bitcoin, you need to be liquid. Liquidity is essential. In the recession time, people have a lot of difficulties. Even if you have also some Bitcoins, in recession times you need to change them to pay your bills or maybe some other stuff. Okay, let's begin with the chart. In my opinion, the price is the only indicator that's not lying, is unmanipulated. We see here the Bitcoin chart, the rise and the beginning of the fall of Bitcoin. Interestingly, each time the price drops lower and lower, the Bitcoin news agencies are bombarding, especially new retail traders, with a lot of news that are confusing. And my recommendation is, while you are trading, just click all those news away, ignore all the news. All the news are produced by companies, by influencers, and their arguments, if you read and you have some experiences in trading, you will find out that the arguments based on trading has a value nearly to zero. We're going now to take a look and to understand the current situation. It's essential also to understand where it came from in the history of Bitcoin. So we see here in February, as we had the last push-up or pump of Bitcoin in the last week of February, the market started to rise up. It started to break ranges, right? So ranges are very essential or to confirm a trend. In a bullish trend, we see, for example, that the market is breaking a range, building another upper range, consolidating a while, and building the next upper range, and so on and so on. like steps. Then we had here a period of very fast move of Bitcoin before the market started to consolidate here or to distribute here the buyers who pushed the price of Bitcoin. And then we got here for the first time the all-time high before the market dropped down. This is very important stage. I will come later to that stage because that's important also for today. And then finally the market went up, and in the 73 zone we got the most important level of Bitcoin, and it was the beginning of fall. Very sharply the market made new low lows and new low highs. It tried again to break that minor high. The market made higher lows, but if you compare now this period of the market and this period of today or this week of the market, we see the market is making new higher lows, but it's not making any higher highs. And that means that is very significant that the trend is very weak, and we are not talking about low time frame, we are here on higher time frame. So the bears who started to push down the market are now accumulating here to push down or making low lows. But where do they go to? If we look now to the left side, we see here at around 59 to 60k, we see we had then the open very important gap, and if the market is going to fill the gap and starts to break below it, the market will go for 50-51 area. So here is that level where I can say really the latest bull trend began. So if the bulls will not be or won't be able to defend this zone, this last resort, the market will drop down deeper to around 40 to 42k. And if they don't defend, the bulls do not defend significantly, and significantly I mean not only making higher highs and higher lows, it has to be in companion of very significant high volume bars, meaning each bar, each bullish bar should be very, very thick, full of volume. And if the volume is not there, it means that's a bull trap, and the bear will continue to push down the market to 24 to 32k. And of course, in trading, in the world of trading, everything is possible. Okay, now I shift the second part of this analysis to make it much more clear. We see here again the high, the all-time high of the market. We see here the beginning of the bullish run during the last weeks of February. And we see here during this week and today the market conditions. And last not least, I will also show you here these significant stations of the market. And now if we change this chart into this kind of candles, we see here that we have clear trends, and the range of each of these candles is around 1,000 pips. And what we see, especially this could be interesting for trend followers as well as for day traders, to spot the market again where we are currently looking. Look, as we have been here at the all-time high, we can say at a price of 73,241, we had the sell signal. So we started to sell Bitcoin, and we drove Bitcoin very well until 62K before we had a period of bullish. We sold again Bitcoin. The Bitcoin went near of 60K, and there we started to buy the Bitcoin until the last 10 days. As we started to sell Bitcoin, the best price we could reach was at around 71,700 to 800, something like that. And we see now clearly the market is breaking one after each other the levels that the magic of the rankos, that they help the traders, especially once a level is broken down, the market will move to feel the first time where it began to rally. And if this level is broken, we come down to around 62 to 63. And now if we add volume or market profiles to this chart, we see here clearly, maybe for those who are familiar with volume profiles, but also whom not, we see that the price, wherever the price is, might the price will be here or the price will be here. It doesn't matter. We see here that the price tends always to go back to the POC levels. This is the weekly. We see here also the downtrend started somewhere here as we had in low values. The market stopped and went back into the POC level, where the bears again accumulated to push down the market. Then at this level, the sellers have not found any significant reasons to hold the positions, but we need to consider that the sellers initiated and are holding these very, very large positions still. So the market stopped to go up, and then at this level, if we go back and look at the beginning where we had the higher high or the all-time high periods of Bitcoin, the period where the market built already this POC, and the bears are defending this zone successfully. They are pushing down on the market. Possibly at this level where the price currently is 69,000, something like that, we try to get up the market at around 70K before the bears will start to push down the market again. And this is a very little head and shoulder formation, right? So we see here, we have the shoulders here already. We have the head here. This is the big head and shoulder. And this is the, well, I say mini head and shoulder. And now very important is if the level of the weekly profile, the 66K is breaking down, the next station will be 65. If that level will break down, the market is going down, to be prepared to around 61,500. Why is the market, and why will the market go back to this level? This is an interesting question. And a logical or a logic explanation is, if we look back again, we see here the open gap, right? You remember that? That was this very big candle with an unfilled dot, and the market is going first of all to fill that period. Now, if we continue this research, we see here typically the gaps are like big magnets for the market, drawing the prices, as well as the POCs are, for example. We see here now in the period as the market started to raise, the POCs shifted higher, but they did it very fast and very quickly. So in between we have now many gaps here. We see here these very empty spaces, and once the market is now going down to fill this gap, once filled this, the market will drop down to the next level to fill this one, to fill this one, to fill this one, and so on. This is the first one. The second one is that the market made in this period, if we compare the POCs, and POCs are 75% of the market volume that's owned and controlled by 10 to 15% of big institutions, financial institutions. So other guys, billionaires like Michael Saylor, or retail traders like you and me, we don't count to them. They are not even little fishes against or versus those institutions. But we see now the market started to shift up very quickly, these POCs, and after the period, the market is now shifting its POCs much more lower, right? So here we have the market is going up. If we have here some consolidation, the next POC will be something around here. Then the market will drop down here, and the next POC will be built here, and so on. So in a bullish trend, we can say that the POCs are shifting higher. Then in a certain period, the POCs are shifting lower, where the market or the bears start to accumulate, while in a bullish market, the buyers or the bulls will distribute the positions. Meaning if the price, for example, coming down, the bulls will first of all to defend this position. On the same time, the bears try to push. That's the reason that we will have then a big fight and consolidation for a longer time period. So the volume will be shifted down. Then the next period is the bears try to shift down the volume, again much more lower, press the market down, and this is then the former volume or POC volume where the bulls start to defend that. That's the reason that we sometimes have very high volatilities, right? A good pattern we can, for example, to find out where we have some very hot zones, are not only support resistances, but there is a pattern that's called broadening pattern or megaphone, like this one. So maybe you can memorize it better. And there are certain periods of the market, let's say like here, and then we have, for example, here the supports, we have here the resistances. While the market tries to break that very key resistance levels, the bulls will interact very quickly, or also in these zones. If the bears try to break that, the bulls will fight and attack them. And now in these zones, something very interesting is happening. We have, for example, the market makes a new higher high and higher high, but after the same moment, the market makes a low, and then the market makes again very fast, quick move, higher high, and then the market makes after that very high, quickly, speed, powered, low. And if we combine them, we exactly find out, we have here a megaphone. So, how to deal with that? Wrongly, some are calling this at bottom or top pattern where the market changes. It's not true. That's only significant that at this moment there is a very hot fight in these zones. So for traders who are not experienced well, and also for very experienced traders, it's a warning signal to stay out, to stop trading in these levels until the market leaves this range. The experienced traders will, of course, avoid these situations that will kill every profit they did in the past. But the new retail traders will lose their money because they are confused. And how? Because there are no insiders. Maybe don't know these patterns. Where should they? Well, these patterns are not taught now by some other traders who are offering trading programs. I never have seen some who are offering them, only a few one. But the research about this study is very, very seldom, so I'm practicing it for years. Therefore, I can talk clearly about it. And these broadening patterns, interestingly, happened here, right? We had also the broadening patterns. If you go back, for example, on your low, on your higher time frames, you will consider that as we reached these zones of 73K, for example, suddenly the market started to build these patterns, and you can easily find them. And once you find them, you exactly know, all right, now we exactly are at very, very key levels where the very big and powerful guys, I'm talking about billionaires, trillionaires, about financial institutions who jump now in this zone. They are waiting, and you exactly know, oh, you are really in a very hot fighting and war zone. If you are someone who, well, familiar with counter trends, I'm a trend follower, but especially in these times, like the market is making a new all-time low or all-time high, I used to wait until this pattern shows itself. Let's say I see, for example, the pattern is starting here, but I don't take any action. I want to see first where it's going to. And we see then that after a while the market made this very quick sudden drop and then started to go back making new higher high. It was something about here. And normally this pattern has, well, we can say a life of around 4 cycles. This is the first cycle, this is the second, this is the third, and this is the fourth. And after the third cycle, I used then to jump into the market, but not in direction of the trend. The trend at this level was bullish, but I looked in at the volume. The volume is usually, if the market if the market rises higher, instead that the volume is also going up, what happens to the volume? The market is going higher, but the volume comes down, and that's the sign for me that I am exactly at the top of the market to jump into market, to prepare my position to go short, because sooner or later the market will drop, not only some few pips, the market will significantly drop down, and you see that I was right with this kind of. Especially here, the same happened, exactly the same cycle. So we had 1, 2, 3, and I went, and now the next cycle reached and is going to reach its fourth period before it's dropping. Where is this drop? We see here again, the drop is here on this candle, right? That is living. Now, how do we know in a volume profile if the price is resisting or waiting at the POC? Well, we need to check that, and with Renkos I can clearly see the market is really going down. You see the red color of the candles. The market is going now for this region. Here possibly we will find out at the price of 65 to 65k to 65,740. We will see again this pattern, and once you do that, if the price is coming down here, what should you do? Should you sell or should you buy it? If this pattern happens here, what should you do here? You should sell this. Only wait for the upper one, the lowest volume, you go short. If you do it here, it can happen that the market runs against you. If your position allowed and stay in the market, do nothing until the market comes down, or take the little loss, wait again until the market reaches this period, and then after the third cycle, you need to count them 1, 2, 3 cycles at all, and then you can sell the market. Now, what happens here? If the market, let's say, reaches this area or this area, well, should we buy? Should we sell? No. We should wait until the fourth cycle is over. If the market after the fourth cycle breaks down, then here's our entry, and the market will go for this region. And usually if it does happen, the market will clearly go and drop very fast after the fourth cycles. If the market at this level builds this pattern, or even here at around 65,000, 65 to 66,000, and it's breaking up, what should you do? you can then take a buy and bet that the market goes higher. How long? Well, back to the POC again, to around 70,000. Will the market make new higher highs or new all-time highs? Well, that's the problem of many traders who have no experiences or less experiences or day traders. For a day trader, it doesn't matter if the price will go to 2 millions or to 100K or even to 8K per Bitcoin. If it does what the market does tomorrow or what the market does in 1 month. Because as day trader, you're trading right now, so on low time frames, so it doesn't affect you. You take your trade, you set your profit target and go. For trend followers, the same, because you're following your trading style as a trend follower, and your trend will be or is over when your trading system gives you any kinds of signals that the trend is over and now you shall go short. So it doesn't matter. For investors and Bitcoin holders, and also for people who stuck in love with Bitcoin or with the illusion or idea that Bitcoin will go to 200 or 2 million or 60 million, whatever, to turn them to a billionaire, well, then you should be warned, because you are not trading really. You are betting your money, but based just on an idea that has no significant fact. How do you know if the Bitcoin will go to that price? Well, that's based on the news and influencers you're watching to, and well, they use very attractive and beautiful words to poison your brains. I'm sorry to say that, but that's realistic. I'm logical if I'm a trader. As a trader, you don't, or you have to say goodbye to any kind of emotions. The price is the only indicator that matters, and the price of now, if you know, so for example, there are people who are offending other people who are bearish or have another opinion that Bitcoin is rising up. Well, I have a question for you. If you think Bitcoin is bullish, if you think that there are no bears or no bearish powers in Bitcoin, if you think that Bitcoin will pump or rally up, then you can certainly answer me this question. Why is not the market able to leave this zone, to conquer this zone, and to run away out of this zone higher? Why is the market each time going higher will be pushed very fast down, right? If you compare the speed of the market is moving higher slowly, but will be pushed down very fast. We can compare that on the charts. The prices do not lie. Today, I think some hours later, we had a movement, and then suddenly the market for about 90 seconds moved up very fast, stopped, and then fell deeper. It went, I think, from 70K to around 7,300. And then the market dropped down. Currently, it is 69,734, right? What does it say? It's saying that we have here a broadening pattern, and now the market missed. I was looking for higher prices because the third cycle is not full yet. Maybe the market can drop. It's possible that the market after this drop going higher, so the market will go higher than to around 70,600, 800, possibly to above 71k, and then drop deeper, and then the 3 cycles are perfect, because then I will increase massively again my shorts that I have, and then let the market crash down. And if I say the market crash down, I don't mean that the market comes to this area or here or here. I mean that the market will go really, really big down to below 20,000, maybe 15 or 16,000, that level, before they reach the 8K. Why 8K? Because below 30K we have a lot of open gap, and the market will and has to go back to these gaps. As I told you at the beginning of this video, gaps are big magnets, right? So trade carefully, trade wisely. This zone at around 67, 68 is important, so we will have some megaphones here. This zone at around 65 is important. We will have some broadening patterns here, and of course here that's the same. And then at around 60k it could be very interesting, and then that's the moment we have the broadening patterns. If it breaks down, the market will collapse. If it's coming back, be coming back to 65. So again, trade wisely. Don't lose yourself in illusions of, okay, I buy, I let it run, and I wait. Soon we are at 200k or 2 million K. If so, congratulations, then you will be a rich man or woman. If not, don't get disappointed, take the profit, but look closely here. If the market is breaking higher, and once the market reaches that zone, we will have again here also again some broadening patterns. If the market is breaking above, then the market reaches the old highs of this week, possibly of the last week. If we have some broadenings here, then we go to the all-time high, and from there we will see where the market leads to. If it doesn't happen, if it's not going to break higher, it tries 1 time, 2 times, 3 times, 5 times even, it failed, it had to go down, and it will go down, right? So that's the way the market works. All right, I wish you good luck, and again, choose your trades very wisely. Have a nice evening.